Welcome to Investing for Beginners. Today, we're diving into how you can start making money online through smart investing. Whether you're new to investing or just looking for online opportunities, we've got you covered. Welcome back to Cashflow Builder's YouTube channel. Your number channel for making money online. Number one channel for making money with AI. Cashflow Builders, the cash must flow. Investing online can seem overwhelming, but it doesn't have to be. Let's break it down into easy steps. First, let's clarify what online investing is. It's essentially investing in various assets through online platforms. These assets can include stocks, bonds, cryptocurrencies, real estate, and more. Online investing allows you to manage your investments from anywhere, anytime, with just a few clicks. Now, let's look at some popular ways to get started. One of the most common ways to invest online is through the stock market. Platforms like Robinhood, E-Trade, and Fidelity make it easy to buy and sell stocks. Start by choosing a reputable brokerage. Many offer user-friendly interfaces and educational resources for beginners. Look for low fees and good customer support. Like, comment and subscribe to Cashflow Builders for more content on making money online, making money with AI and personal finance. Tip 1. Start with index funds or ETFs to diversify your investments and reduce risk. Tip 2. Do your research or consult with a financial advisor to understand the market better. Next up is real estate crowdfunding. Platforms like Fundrise and Realty Mogul allow you to invest in real estate projects with relatively small amounts of money. You can invest in commercial or residential properties and earn a share of the profits. It's a great way to get into real estate without needing large sums of cash. You can invest in commercial or residential properties and earn a share of the profits. It's a great way to get into real estate without needing large sums of cash. Crowdfunding is a method of raising capital by gathering small contributions from a large number of people, typically via online platforms. It allows individuals, startups, or organizations to fund their projects, ideas, or ventures without relying on traditional funding sources like banks or venture capitalists. Here's a closer look at crowdfunding. Types of crowdfunding. 1. Donation-based crowdfunding. Purpose. Individuals contribute money to support a cause, project, or charity without expecting any financial return. Examples: fundraising for medical expenses, disaster relief, or community projects. Platforms like GoFundMe are popular in this category. 2. Rewards-based crowdfunding. Purpose. Backers contribute funds in exchange for non-financial rewards, such as products, services, or perks related to the project. Examples: funding a new gadget or creative project, where backers might receive a prototype or early access. Kickstarter and Indiegogo are well known for this type. 3. Equity-based crowdfunding. Purpose. Investors contribute funds in exchange for equity or shares in a startup or company. This is akin to investing in a business with the expectation of future financial returns. Examples: funding a tech startup or small business, where investors gain ownership stakes. Platforms like Seed Invest and Crowdcube facilitate equity crowdfunding. 4. Debt-based crowdfunding, or peer-to-peer lending. Purpose. Individuals or businesses borrow funds from a large number of people, typically with the obligation to repay the principal plus interest. Examples: funding a small business loan or personal loan. Platforms like Lending Club and Funding Circle are examples of debt-based crowdfunding. How crowdfunding works. 1. Project creation. The project creator sets up a campaign on a crowdfunding platform, detailing the project, funding goals, timeline, and rewards or returns offered to backers. 2. Promotion. The creator promotes their campaign through social media, email marketing, and other channels to attract potential backers or investors. 3. Funding period. Backers contribute money to the campaign during a specified period. If the campaign reaches its funding goal, the funds are collected and used as intended. 4. Fulfillment. For reward-based and equity-based crowdfunding, the creator delivers on the promised rewards or equity. For donation-based crowdfunding, the funds are used for the stated cause or project. 5. Fees. Crowdfunding platforms typically charge fees based on the amount raised or a percentage of contributions. These fees can vary by platform and type of crowdfunding. Tip 1. Check the track record of the platform and its investments. Tip 2. Diversify by investing in different types of properties. Cryptocurrencies have been making headlines lately. Platforms like Coinbase and Binance allow you to trade Bitcoin, Ethereum, and other digital assets. Cryptos can be volatile, so it's essential to do your research and only invest what you can afford to lose. Cryptocurrency is a type of digital or virtual currency that uses cryptography for security. Unlike traditional currencies issued by governments, like the US dollar or euro, cryptocurrencies typically operate on decentralized networks based on blockchain technology. A blockchain is a distributed ledger enforced by a network of computers, often called nodes, that work together to validate and record transactions. Some key features of cryptocurrencies include: 1. Decentralization. Most cryptocurrencies operate on decentralized networks, which means they are not controlled by any central authority, such as a bank or government. 2. Blockchain technology. Transactions are recorded on a public ledger called the blockchain. This ledger is maintained by a network of computers, which ensures transparency and security. 3. Cryptography. Cryptocurrencies use cryptographic techniques to secure transactions and control the creation of new units. This helps protect against fraud and ensures the integrity of the currency. 4. Volatility. The value of cryptocurrencies can be highly volatile. Prices can fluctuate dramatically over short periods, which can lead to significant gains or losses for investors. 5. Variety. There are thousands of different cryptocurrencies available, each with its own unique features and purposes. Bitcoin, BTC, is the first and most well-known cryptocurrency, but others like Ethereum, ETH, Ripple, XRP, and Litecoin, LTC, also have significant followings and use cases. 6. Use cases. Cryptocurrencies can be used for various purposes, including online purchases, investment, and as a means of transferring value across borders quickly and with relatively low fees. Narrator. Tip 1. Use secure exchanges and enable two-factor authentication. Tip 2. Consider starting with well-established coins before exploring newer ones. Another option is peer-to-peer lending through platforms like Lending Club or Prosper. You can lend money directly to individuals or small businesses in exchange for interest payments. It's a way to diversify your income streams and potentially earn higher returns than traditional savings accounts. Peer-to-peer, P2P, lending is a method of borrowing and lending money directly between individuals, bypassing traditional financial institutions like banks. This system is facilitated through online platforms that connect borrowers with investors who are willing to lend money. Here's a breakdown of how P2P lending works. 1. Platform. P2P lending operates through online platforms, such as Lending Club, Prosper, or Funding Circle, that serve as intermediaries between borrowers and lenders. These platforms handle the loan application process, credit checks, and sometimes even loan servicing. 2. Borrowers. Individuals or small businesses seeking loans apply through the P2P platform. They typically provide information about their creditworthiness, financial history, and the purpose of the loan. The platform evaluates this information to determine the borrower's credit risk. 3. Investors/lenders. Investors or lenders sign up on the platform and browse available loan listings. They can choose to fund part or all of a loan based on their risk tolerance and investment preferences. Investments are often spread across multiple loans to diversify risk. 4. Interest rates. The platform sets interest rates based on the borrower's credit risk and market conditions. Investors earn interest on the money they lend, and borrowers pay interest on the amount they borrow. 5. Repayment. Borrowers make monthly payments to the platform, which then distributes these payments to the investors. These payments include both principal and interest. 6. Risk. P2P lending carries risks for both borrowers and investors. borrowers may face high interest rates if their credit is not strong, while investors risk losing money if borrowers default on their loans. Some platforms offer mechanisms to mitigate these risks, such as diversification or loan loss reserves. 7. Regulation. The regulatory environment for P2P lending varies by country. In many places, it's subject to financial regulations to protect both borrowers and lenders, but the extent and nature of regulation can differ. 8. Advantages and disadvantages. For borrowers, P2P lending can offer access to funds for those who may not qualify for traditional bank loans, sometimes with more competitive interest rates. For investors, it provides an opportunity to earn higher returns compared to traditional savings accounts or investments, though it comes with higher risk. Overall, P2P lending has gained popularity as an alternative to traditional financial services, offering a more direct and potentially more flexible way to access and provide credit. Tip 1. Review the borrower's credit profile and loan details. Tip 2. Diversify your investments across multiple loans to spread risk. To wrap up, online investing offers a variety of opportunities to grow your wealth. Start with what you're comfortable with and always do your research. Like, comment and subscribe to Cashflow Builders for more content on making money online, making money with AI and personal finance. Thanks for watching. If you found this video helpful, don't forget to like, subscribe, and hit the notification bell for more investing tips. Happy investing!